Hi, my name is Adnan Hasbi and I'd like to welcome you to this channel. In today's episode, we're going to do a quick comparison between StashAway and Wahid. So over here, as we can see, I'm actually logged in my StashAway account. And amongst the accounts which I have within StashAway, I have a balanced portfolio and also a growth portfolio. So with regards to the balanced portfolio, over here we can see this particular return, which is time weighted and also money weighted. However, if we look at the Wahid calculations for our returns, it's a different method which they use. So for us to do an apple and apple comparison, I'm going to do a very simple way of getting our returns, which is the old-fashioned total returns divided by the net deposits. And we will annualize it. That way, we can compare the returns for both StashAway and also Wahid. So with regards to our balanced portfolio, in terms of assets, 20% of the assets is invested in government bonds, 20% is invested in fixed income, 31% is invested in the US equities. And to further break this down, we can see in terms of government bonds, it invests in the emerging markets, so on and so forth. The second portfolio I have in StashAway is the growth portfolio. Over here, I invested as much as 850 ringgit and the total returns is 280 ringgit. And I've invested it since December 2018 up till today. The time weighted returns is about 26%. The money weighted is about 33%. And as I mentioned a while ago, I will take the total returns divided by the net deposits. That way I can compare between the two platforms. But in terms of assets, for the growth portfolio, we can see that a big allocation is invested within the equities, whereby 39% is invested in the US equities and another 33% is invested in international equities. Okay, so over here is my Wahid portfolio. And as we can see, I deposited some money in early January 2020. The amount I invested is as much as 500 ringgit. The next interesting slide over here is that as much as 44.33% of the portfolio is invested in US stock. And if we click the US stocks, we will see this particular ETF which Wahid is invested in. The next question one may have is, what is in this Wahid FTSE USA Sharia ETF? So over here, I'm looking at their fact sheet, and this is as of September 30th, 2020. This is the latest fact sheet I can get. Over here, we can see the constituents and the top few stocks which Wahid invests in is Apple, Johnson & Johnson, Procter & Gamble, Tesla, so on and so forth. This is the weightage for all of the stocks. This is our last slide, and I want to just give a quick disclaimer. When I analyzed some of the returns, it was done on a rough approximate or a rough estimation. Given that this is a one-man YouTube channel, these are the resources we can work with, but it's the same calculation which I'm doing it across the board. And over here, I've already listed down my investments. SA stands for StashAway Balance Fund, SA stands for StashAway Growth Fund, and finally W stands for Wahid Aggressive Fund. This is when I first invested in all of these funds. For the StashAway, I invested it in November 2018. The StashAway Growth, I invested it in December 2018, and Wahid, I invested since January 2020. The amounts I invested are as follows, and these are my returns based on Malaysian ringgit. If I were to take these returns and divided it by the amount invested, this is the percentage gain for each of this portfolio. Again, one of the reasons why I'm doing this is to compare all of these funds. Towards the end, I've analyzed everything. That way we can give a fair comparison between all funds. And over here, we can see that Wahid Aggressive and StashAway Growth, their returns is almost the same at 17%. So I guess in conclusion over here, all of this robo-advisory actually give superior returns. But having said that, I'm sure you have watched one of my earlier episodes where I invested in this particular stock called Perak Transit. And the returns I got from that particular stock is about 55%, and I've invested in that stock for about 3 months. And if we were to analyze it, it's going to be a much larger return. In conclusion, if you just started investing, the robo-advisory platform gives a relatively superior return with very minimal cost. In this episode, we looked a little bit on StashAway and also Wahid. One is Sharia and the other is not Sharia compliant. So that's the first thing. The second thing I'd like to highlight is once we get a bit more used towards trading and we want to test our skills, that's where we can actually start stock picking. And if we are good enough, we can actually even get better returns compared to the platforms out there. With that, guys, should you find this episode useful, give me a bunch of thumbs up, give this channel a bit of love. Aside from that, stay tuned for future episodes where we talk more about investing, and especially during these trying times and also during this particular crisis, there's always opportunities out there. And in this channel, we're going to explore different opportunity and let's thrive in this current market condition. With that, I wish you good luck and I hope to see you in the next episode.